Hey everyone, welcome back to Corporate Decoder, the place where we sniff out the truth in corporate filings. Today we are diving into Idaho Copper Corporation's recent filing, and let me tell you, there's more than just rocks and minerals in this report. We are going to unearth some financial facts that might just make you want to pan for gold yourself, or maybe run the other way. This filing is like a treasure map for investors, if treasure maps were written in confusing legal jargon. Idaho Copper, a company focused on exploring and developing a copper molybdenum silver deposit, is giving us a peek into their operations. The key takeaway? They are trying to get the go-ahead to sell shares to the public, but before you jump in, let's decode what's really going on. Idaho Copper Corporation sounds pretty straightforward, right? They are hunting for copper, but the heart of a company lies in what they call the Como project. Basically, they are trying to dig up 2,040 acres of land in Idaho, hoping to find copper, molybdenum, and silver. It sounds like they want to capitalize on a future copper shortage. First thing to know, this isn't their first attempt to register these shares. This is Amendment No. 7. Meaning for whatever reason it took them 7 tries to submit this document. Hopefully it doesn't mean that it's disorganized or there are accounting errors. So what's the big deal with this registration statement? Basically, some current stockholders want to sell their shares, up to 94,126,642 shares to be exact. The company isn't getting any of the money from the sale, but they are hoping it might lead to more cash down the line. If the folks holding warrants decide to use them, that would bring about 278 million if all warrants were to be exercised. And 42 shares to be exact. The company isn't getting any of the money from this sale, but they are hoping it might lead to more cash down the line if the folks holding warrants decide to use them. That would bring about 278 million if all warrants were to be exercised. It's important to keep in mind that the company's stock is traded on the OTC Markets Group, on the pink tier, meaning its public trading market is very limited. So let's talk numbers. Before the offering, there were about 261 million shares. What this all means is that a big chunk of the company could soon be up for grabs. That's a huge percentage of shares being registered for potential resale. If they all get sold, or even if people just think they might get sold, the stock price could drop. One big thing to know about this company's stock is that it's considered a penny stock by the SEC. This means it trades at less than 5 a share, and it comes with a lot of extra rules and regulations. These rules aren't just there to be annoying, they're meant to protect investors from scams and manipulations in the penny stock market. Now let's talk about risks, because every investment has them and Idaho Copper lays them out in detail. First, they are going to need a lot more cash to get this copper project going. They project needing around $10 million, so if they can't get the cash, the whole project might be delayed or worse, stopped. The estimated cost for the whole project is currently over $1 billion. I can be higher than what they currently expect. And there's the risk that the amount of copper they think is in the ground isn't really there. Mineral estimates are just that, estimates. There's no guarantee they'll find enough copper to make the project profitable. Also, metal prices can be wildly unstable. The project needs a ton of permits to get started. The government can delay or reject them. And also, legal challenges from non-governmental organizations can affect permitting timelines and prevent or extend timing of company activities for exploration and exploitation. All these permits can also be suspended at any moment. They also have quite a few outstanding convertible notes. If they mess up the terms of these notes, they could face some serious penalties, which would not be good. All these risks show that a lot can go wrong, and even the SEC is trying to say that the indemnification may be against public policy. Let's take a look at management's perspective. The company recognizes that there is no guarantee that the explorations will have positive results and that there is going to be an ongoing need of financing, and the business long run greatly depends on the external economic environment. Jumping to the financials really quick, let's check their balance sheet for a quick health check. At the start of 2025, they had about $200,000 in current assets, but almost $1 dollars. And talking about liabilities, they also have the risk of not complying with their outstanding convertible notes, and if that happens, could lead to significant penalties. They are also losing a lot of cash. Operating activities used up $2.5 million versus only $800K last year. The company says that they need to raise over $1 million for operations, and there is no guarantee that the additional capital will be available. So bottom line, they need money and are not sure how to get it, which is not the best situation for a potential investor. And one last thing, don't expect any dividends anytime soon. The company intends to keep any earnings to expand the business. This might leave investors unable to see any returns if unable to sell stocks. Also, Officers and directors own a very big piece of the company, meaning they can do what they want and won't be facing too much headwind from regular stockholders. They approved a renewed code of ethics which is applicable to the executives. There are no employment agreements, and some of the people involved may have conflicts of interest. Looking at the team, the Chief Financial Officer, Robert Scannell, has a lot of financial experience and qualifications like being a chartered financial analyst, but he is a managing partner of a family office. On the other hand, Stephen Radofsky, who used to be CEO, has experience in the natural resources sector, but he's also involved in other companies that are providing innovative financing for the junior mining and oil sectors. Here's an extra kicker: even the legality of 1872 mining law, the law that's essential to mining operations, may be challenged and put in doubt. There is global inflation, deflation, volatile fuel, and lack of available credit, which all can affect the company's potential to profitability. Now, let's put it all together. Idaho Copper is a small company with a big dream and a lot of challenges. Based on the report, they need more cash, and the company may not be able to continue operations. They are in a tough industry, which will have a lot of regulatory requirements and some environmental challenges to be solved. The company might be a good bet for the future. In the end, you won't be able to get any dividends anytime soon, but it has good upside potential. The market may penalize them for ESG factors or some pressure to do ESG projects, even though it will not help business. But overall, the company is very speculative. All these points make it so there is not enough information to make a good judgment on investing or not. Thanks for tuning in to Corporate Decoder. If you dug this deep dive, be sure to hit that like button, drop a comment with your thoughts, and subscribe for more financial investigations.